Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news that the US risk rally rolls on despite some worrying economic data. First, however, we should note that this is a holiday weekend in the US, and they need time to absorb the poor retail data released at the end of last week. Compounding that, American manufacturing fell sharply in January according to US Fed's tracking, led by the biggest drop in vehicle production in a decade. This does seem to indicate a downward momentum shift in their manufacturing sector as year-on-year gains are now being eroded. But optimism that a US-China trade deal is making progress has weighed against the data, and Wall Street posted gains. A lot is riding on these talks. Those gains came despite data showing the S&P's first quarter earnings per share dropped 0.3% year-on-year. That's a big drop from 8.2% rise expected as recently as October, and would mark the first contraction in American corporate earnings in 3 years. Still, not everything in the US is going south. Their mortgage delinquency rate fell to an 18-year low. Consumer economic sentiment rose in a relief rally in early February as American households absorbed the end of the US government shutdown and the Federal Reserve's decision to pause its rate increases. But that sentiment reading is hard to reconcile with the sharp drop in retail sales we reported on Friday. Across the northern border, Canada's existing home sales rose 3.6% in January from the previous year, but remained 4% below levels posted 1 year ago. The idea of wealth and capital gains taxes has a new ally, Bill Gates, who said the US deficit problem can only be fixed by raising taxes on the rich. In China, banks are lending aggressively in response to Beijing's encouragement. Lending expanded 3 times as fast in January than December, rising a remarkable $1 trillion in the month. In Australia, ratings agencies Fitch and S&P have been weighing in on their banking sector risks. Fitch cut NAB's rating outlook to negative, while S&P said that Hayne is not the banking sector's greatest risk. Falling house prices are. US Treasury 10-year yield is back at 2.66%, but their 210 curve has slipped below 15 basis points. Gold is up another $3 an ounce to $1,321 an ounce. US oil prices are up to just on $55.50 a barrel, while the Brent benchmark is just under $66.50 a barrel. And the Kiwi dollar is starting the week firm at 68.6 US cents. On the cross rates, we're also holding high at 96.1 Aussie cents and up at 60.8 euro cents. That pushes the TWI up over 73.2, which is a 2-month high. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.